Now it's high time to welcome Uranium Energy Corporation, America's leading, fastest-growing uranium mining company. Uranium Energy controls one of the most significant uranium resources, which I think is interesting because today everybody has spoken about uranium being back in the finer salons.
Back in vogue.
Yes.
Yeah.
So
thank you.
Please go ahead and tell us why.
Great. Well, thank you, everyone. And I'm Scott Melbye. I'm Executive VP of Uranium Energy Corp, and very pleased to talk to you about uranium and nuclear energy. I'm a bit nostalgic when I come here to Stockholm as a 40-year veteran of the uranium and nuclear energy industry with some of the largest uranium producers in the world. I've sold a lot of uranium to Vattenfall and the Swedish utilities all the way back to the 1980s. So to hear that the energy policy of Sweden is coming back around, not only just eliminating the phase out of nuclear power, but increasing by 10 times the amount of nuclear generation in the country is really exciting, and it's a bit of what's happening around the world. With the exception of Germany, most countries are either moving into nuclear for the first time or are expanding existing nuclear programs. The uranium commodity has been one of the most exciting commodity stories globally in recent years. We've seen uranium prices go from a very deep bear market that lasted for close to 11 years, which is difficult and brutal for any commodity to go through such a period. It also set the stage for the recovery that we're in now, because in that period, we missed a cycle or two of exploration, of development. So now that uranium prices are have moved above $100, have kind of settled back around the $80 a pound level in the spot market, that in a more typical commodity like base or precious metals would bring on idle mines in places like South America, Africa, Indonesia. We have very few of such mines. UEC is a good example of a company that does have those kind of mines that can be brought on, but we need a lot of new mine development to close this gap in the coming years, and the barrier to entry is quite high. What's driving nuclear power? It's really the realization that the world cannot get to a lower carbon future or no carbon future and still have economic growth without nuclear power. We've seen 64 units commence construction. We've added 70 large units around the world in the last 10 years. And that's even before we get to the stage of the small modular and advanced reactors, which are now seeing the first-of-a-kind units being built in places like Texas, Wyoming, Alabama, Ontario, Canada, the UK. These are the small factory-built reactors that are shipped on site and provide 50, 100, 200 megawatts rather than the big multi-billion-dollar 1,600 megawatt units that continue to be built. What's interesting with SMRs, they're a good fit for process heat and electricity for mining and industrial applications, whether it's petrochemical or mining. They are used can be used for desalination of water in arid countries. Data centers, huge driver. You saw the announcement of Microsoft convincing Constellation Energy to restart an idled reactor, the 3 Mile Island reactor in Pennsylvania, and provide 100% of the offtake to Microsoft for their data center as a real trend. Amazon has done the same thing with another reactor in Pennsylvania, buying the entire offtake behind the grid for their data center demand, which could be 9–10% of total electricity consumption in the United States coming from data centers. Well, once you've kind of gone after existing reactors, the Bill Gates, the Peter Thiels, Elon Musk, Sam Altmans are going all in on small modular and advanced reactors and intend to site these with these mega data centers, data farms that they're building to drive and not have this AI revolution that is creating multi-trillion-dollar corporations in the cloud computing and AI sector. The only thing that'll stop that is lack of power. So we're seeing the market extremely strong for uranium, and this is the supply and demand. The blue and the black and red lines are the demand high case and base case. Why I show high case? We're trending towards the high case. We're doubling nuclear generation globally by 2045. The dotted line is the aspirational goal that came out of COP28, was signed on by 26 countries, including Sweden, to triple nuclear power by 2050. That's going to need a lot of mines. Between now and 2030, there's very few mines that can come on that quickly. I'm going to talk about a couple of them. So we're in a very much a supply squeeze in the near term. If the supply and demand wasn't enough, geopolitics plays a big role in uranium. We get, in the United States, 50% of the uranium for 20% of our electricity comes from Russia, Kazakhstan, and Uzbekistan. Was not much of a problem in many people's minds until the Russian invasion of Ukraine. And now we can't run away from Russia, Kazakhstan, Uzbekistan fast enough. We finally passed a ban on Russian uranium 2.5 years after the invasion. I credit Sweden and Vattenfall with self-banning themselves purchases of Russian uranium the day after the invasion, but we finally got around and did the same. Also putting a lot of money into revitalization of the American fuel cycle uranium conversion and enrichment. But where does UEC fit? We are the fastest growing uranium company in the world today. How did we get there? At the time before Monday, we had invested $900 million in M&A and physical uranium purchases to grow this company. On Monday, we invested another $175 million to acquire Rio Tinto's uranium assets in Wyoming. So we're now over $1 billion investments, which has to date tripled our resources in the ground and quadrupled our licensed productive capacity. We have the ability to produce 8.5 million pounds from mines in North America, not in Central Asia, not in Sub-Saharan Africa, but Texas, Wyoming, and soon to be in Saskatchewan, Canada. We have a strong balance sheet, $300 million in cash and liquid assets that allows us to make these kind of investments without having to come to equity markets. And a lot of those that cash has been by virtue of uranium investments that we made off the bottom of the cycle. But this graph just shows the timing of when we made our acquisitions. When uranium was $20, $30 a pound, that was the time to be acquisitive. And we purchased these assets for 10 cents on the dollar. The Uranium One assets in Wyoming, that is the source of our current uranium production, we acquired for $112 million from the Russian state atomic energy company Rosatom, literally 6 months before the invasion of Ukraine. Today, those assets would sell for $500 million because of the low cost and near-term production capacity. Rough Rider in Canada, I'll talk about as well. But the latest acquisition on Monday of Wyoming assets of Rio Tinto at Sweetwater gives us another 175 million pounds of historic resources at a cost of 175 million. Easy math, it was $1 a pound to acquire resources, which I'm pretty sure you can't engage in exploration and find uranium for such a low acquisition cost. It also gives us a third hub and spoke production facility. I'll get into how and where we're producing in the US, but it gives us another center of operations, a second one in Wyoming that we can look to bring into production. Huge land package. It's in the Great Divide Basin of Wyoming. The conventional mill that sits on the site can process conventional ores, but it can also be modified to process the in-situ recovery resins, which is the way we produce the bulk of our uranium in the United States. So resources now of 332 million pounds, which will go to add 175 million once we confirm the historic resources with SK 1300 confirmation, and we are the second largest resource holder of uranium resources, second only to Cameco in North America. 100 million of these pounds are within 50 to 100 miles of our 2 processing plants, and now soon to be 3. The plan is quite simple. Produce and cash flow from Wyoming and Texas with costs in the $40 all-in cost range. That puts us first or second quartile globally. We're not as big as the Kazakhs or the Canadians, but our cost basis is comparable. We're competitive. That can throw off $400 million in cash flow by the end of the decade, which can be reinvested into our pipeline of projects like the Rough Rider project in Saskatchewan. So production restarted in Wyoming. The former Uranium One assets at Irigaray Christensen Ranch. These are assets that were built by Westinghouse, owned by the French nuclear energy company Orano, Areva, and Rosatom. So some of the biggest players in the business own this. It's now in our portfolio and in production. The hub and spoke means that we've got a licensed central processing plant, can produce to 2.5 million pounds, soon to be 4 million when we expand the license. And we have 4 permitted licensed well fields where we mine and extract the uranium to feed that plant. In Texas, we've got a similar hub and spoke structure where we've got a central plant in Karnes County, south of San Antonio, and 5 satellites, 3 of which are permitted and licensed. Why is permitting important? In uranium space, it's hard to permit and license a mine anywhere. Uranium is just another level of challenge. We have all that licensing, that 8-9 years of licensing behind us. They're purely economics decisions to move forward. This is what the ISR mining looks like. It's not the open pit conventional that you would be used to. It's injecting sodium bicarbonate or Perrier water into a sandstone ore body, oxidizing the uranium off the grains of sand, pumping them to the surface, running them through an ion exchange column like you see in the bottom of the slide, and attaching the uranium from solution to resin beads. The resin beads are then trucked to the central plant to be eluted, precipitated, dried, and packaged into the standard yellow cake project. Advantages, low capital cost. Our entire ramp up of all our operations to get to 5 to 6 million pounds of annual production in Wyoming and Texas by 2030 is under $50 million. That would be the budget for tires at a big conventional mine where capital is in the hundreds of millions or even billions. So in this post-inflationary period, to have existing infrastructure and only incremental well fields is a huge, huge advantage. In Scandinavia, ESG is important, and we know that because we hear that from Vattenfall, TVO in Finland, EDF in France. Our company has the highest sustainability rating of any uranium mining company in the world today, and we're quite proud of that. And it's because, let's face it, our technology is very non-invasive. It's got a low, small carbon footprint. We don't disturb a lot of land to get this production out and to market. So we embrace ESG because we're good at it, and it matters in markets like Scandinavia. So Irigaray Christensen Ranch ramped up in August. Initial year production will be quite minimal, under 500,000 pounds, but ramping up to 1 million, 2 million, and we expect 4 million pounds of production out of Wyoming over the next 3-4 years. As we're mining out the well fields at Christensen Ranch, we're then transitioning to Reno Creek. And again, think about oil field depletion. As we're depleting the existing wells that are producing, we have to stay ahead of the depletion rate and drill more wells, more header houses, connector well fields, trunk lines to continue to maintain production and increase it. Reno Creek has 27 million pounds, 40 miles from the processing plant. In Texas, similar, we have the plant at Hobson and our existing mine at Palangana, which shut in when uranium prices went down. We can mine another 1 million, 2 million pounds there, but our main focus is coming from the Burke Hollow project, which is the largest well field under development in the United States. It's a 20,000-acre ranch. Every hole we drill on the property seems to discover more resources as we follow the geological trend around this ranch. We're looking to produce 2 million pounds a year from Texas, but in all these numbers, keep in mind that we have the flexibility to go higher. If the market demands more or less, we can scale this. When you're building a big conventional mine, pretty hard. You're set on a mine plan, you have to go with it for better or worse. If we're overly optimistic or we're not optimistic enough, we can gauge the production to be more than that. We have 4 million pounds of licensed capacity in Texas. Palangana will be mined out concurrently with Burke Hollow and go into restoration. If that wasn't enough, we made the acquisitions of UEX and Rough Rider from Rio Tinto. The Rough Rider deposit, by no means of exaggeration, if it was its own company and a standalone company with 70 million pounds of 3 to 4% ore grade within a couple kilometers from the McLean Lake Mill, Rabbit Lake Mill on the Key Lake McArthur River corridor, it would trade at $1 billion plus market cap. We acquired it for $146 million, and I think at some point here we're going to see a re-rating where the value of this is appreciated. That time will likely come when we issue an economic report on the capital cost to develop, the operating cost, milling options, time to development, which will come out and indicate that this can be a 6 million pound a year producer by 2030 timeframe. That sounds quite aggressive, but a lot of the permitting and pre-development work was undertaken by Rio Tinto, who bought this project back in the day for $600 million and put in $100 to $200 million in development costs. So again, it fits our contrarian strategy. Christie Lake is unique because it's the only land that sits between Cigar Lake and McArthur River, the world's two richest, highest grade, largest uranium mines. Only land that's not controlled by Cameco and Orano. We're drilling on this property and finding Cigar and McArthur-like ore grades, even 60% ore grades on this project. So we'll look to see this fit into future development. UEC, balance sheet, very clean, $300 million in cash, no debt. We are attracting some really interesting shareholders. As our market cap has gone above 2 and even above 3 billion market cap, and I'll show you the trading volume that we get. We're one of the most liquid, the second most liquid traded uranium equity behind Cameco. We're getting into the portfolios of big institutions like here in Scandinavia, Norge Bank, which took a 5% stake in our company and like what they see, and we're getting big enough to now where we're getting into the portfolios of bigger companies. The fact that our marketing is quite unique. We're an unhedged seller of uranium. In the uranium space, most miners and most consumers like to hedge. I like to tell people I'm not in the business of hedging the upside risk for utility companies. I'm in the business of getting you the highest price I can possibly get for this uranium. So if uranium goes to 100, 150, 200, that will be our selling price. Now, does it mean we don't have a safety net below us if uranium prices go back down? We don't see a lot of conditions likely for that to happen, but if it does, we don't have $1 billion conventional mine. We can scale back to meet the market needs. So when you invest in UEC, you're investing in really pure leverage to the spot price going forward, which you can't get from some of the other major players in the business. But it doesn't mean that we don't have a strategic approach to marketing. We have relationships with the Emirates Nuclear Energy Corporation. We're very appealing in a short-term spot sense to utilities in Europe and the United States. We have a strategic relationship with Bill Gates and TerraPower, who are building one of those SMR reactors in Wyoming. As they grow, they want us to grow with them and be a uranium supplier. The Department of Energy reestablished a strategic uranium reserve similar to the petroleum reserve in the United States early last year. We were a major supplier into that program with the DOE. So physical uranium, this has been interesting. I mean, again, with this view that we felt that uranium was undervalued and demand was increasing and supply was tightening, we basically backed up a truck and bought all the physical uranium we could when uranium was below the global cost of production. So last year, for example, we sold some of that uranium for $164 million in revenue, $50 million in profit. And as we sit today, we have 1 million in inventory, 1 million pounds in inventory at a low average cost of in the low 50s. And we have another 1 million pounds coming in at even lower average cost of future delivery. So that represents a bit of a war chest for us to reinvest into our operations. I mentioned the liquidity. On the New York Stock Exchange, we're trading 6, 7, 8 million shares a day. This is a stock you can get into or get out of without influencing the market. It's a very well-known, tradable name. We have hundreds of years of experience. We are miners, developers, explorers, marketers, we've done permitting and licensing of mines in Saskatchewan, in the United States. we're equipped with people that are able to not only just operate the mines that we're bringing into production today, but grow this company into really one of the top 5, top 10 uranium producers in the world in the coming years. So with that, I think I'm running out of time. But listen, this is, if you want leverage to the nuclear energy story with unhedged production, you want stable jurisdictions, low-cost UEC is worth taking a look at and putting in your portfolio. So with that, I don't know if we have time for questions or...
No, we have already run over.
We've run over. So anyway, I'm around for the next
yes, you will be
day, so please seek me out and we can follow up.
Thank you for that.
Good. Hey, thank you so much.